Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney, joined by Scarlett Fu. We're joined by Bloomberg's Denita Sikova. Denita, what are you looking at?
Let's start with Intel. Ticker is INTC. The stock is down today. A lot of pressure, down 1%. It's coming from a rating change from HSBC. Currently, the stock is reduced from hold. The company writes that the recent deal-related strength in the stock is not sustainable. And in fact, if you look at that September chart, just the stock went parabolic. It's up more than 90% of the August lows. The company's new partnership with NVIDIA was one of the biggest boosts. But of course, there have been many deals. NVIDIA recently investing in the company following U.S. President Donald Trump plans to accelerate the payment of about $9 billion of funding. Then we have a $2 billion investment from SoftBank. So this has really boosted sentiment there. But clearly for HSBC, that is not enough. They say Intel's own execution remains key to any sustainable turnaround. We actually had a great story on the terminal recently that the cash infusions have done little to fix the core business. It's money-losing chip-making operation. So perhaps investors still keep an eye on this. One thing HSBC is saying is that the only deal that matters, that can fundamentally change anything, would be one involving technology sharing with TSMC. Still, obviously, super strong year for Intel despite the move today.
Absolutely. Okay, so a downgrade dooming Intel shares, at least for today. There's also a downgrade on FedEx.
Yeah, and the reaction is even worse. FedEx is down 2%. The downgrade is coming from JPMorgan. They cut the recommendation to neutral from overweight. The price tag is still positive, a little bit of gain from here. He wrote that the perception of a weakened price discipline among less-than-truckload carriers justifies lower multiples. We've seen even from FedEx, their projection is about 1 billion hit from the trade volatility this year. And clearly, that has been one of the biggest companies people are watching when it comes to impact from tariffs. And that so far is really weighing on the company. Most of the reduction to adjusted operating profit stems from lower shipments from China to the US. Obviously, that's a highly profitable shipping lane. The transport sector, JPMorgan says, faces abysmal market sentiment. Some negative sentiment there.
All right, how about Oracle?
Oracle had a really rough day yesterday, and today we're seeing a big reversal. Stock is up about 2% now. The ticker is ORCL. Of course, it came after the information reported that its cloud computing business is generating lower revenue than many on Wall Street have been estimating. But the reaction on the street is not negative at all. Mizuho is saying this is a buying opportunity. Bloomberg Intelligence is saying gross profit of less than 20% is not that surprising. And generally, we're seeing a lot of positive optimism. Oracle shares have jumped around 70% this year. Demand for artificial intelligence computing has been soaring. And clearly, investors don't want to miss on any buying dip opportunity. And we see that on display today.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.